Hey, this is Mr. Bergman, and this is Chapter 9.4. We're going to journalize transactions in a general journal. Just a brief reminder of the different types of journals that we have. If we're using a cash payments journal, that means that we are paying cash and we're using checks as our source document. We haven't used the cash receipts journal yet, but that will be when we're receiving cash. And then the sales journal is going to be used when we sell something on account with a sales invoice. Now, the purchases account, we know that we purchase merchandise on account, and our source document is a purchases invoice. And the general is when no other source document can be used, and that's usually when we have a memorandum. Now, in the work together problem for 9.4, it says that a general journal for Rude Electric is given below, and we're going to use the current year and journalize the transactions on page 8 of the general journal. Now, source documents are going to be abbreviated as a memorandum, and then we have also this other form called a debit memorandum, which we're going to talk about here in just a second. On October 5th, we bought store supplies on account. Now, if we buy supplies on account, supplies are not merchandise, therefore we cannot use the purchases journal. We bought store supplies. If we bought it with cash, we could put it in the cash payments journal, okay, because as that general debit column. However, if we bought supplies on account, we need to put that in the general journal. And so we attach a memorandum to the actual receipt that we purchased this with, and we'll put it in our general journal. So we put this in page 8, so I have October 8th, or 5th, sorry, and we know that when we buy supplies, supplies is an asset, and it's actually store supplies. Our document number is memorandum number 35, and we debit $180. Okay, now we bought this on account. Okay, we bought it on account. Now we bought supplies on account, so that means we cannot put it in the purchases journal, and we bought it from designer supplies. So we're going to put down accounts payable designer supplies. Now here's a new note for you. You're going to put a little slash right here because we're going to have two different ledgers coming up where we have an accounts payable account right here in the general ledger, and then an accounts payable ledger where designer supplies goes in. Something else you need to know is that there needs to be a forward slash here, because technically we're going to post this twice, and that's the reason why there's a slash here and there's a slash here. Very, very, very important to know. We're going to go ahead and credit that for $180. Okay? So the next transaction is occurring on the 7th, and it says you returned merchandise to Hendrix Products. Now sometimes what will happen is we'll buy something and it's damaged in transit, maybe it doesn't work or just needs to be returned, and so we have a special account called Purchases, Returns, and Allowances for this particular transaction. Now when you're doing this, notice that there's this is called a debit memorandum, which is prepared. When we return something, we usually get a store credit of some sort. We're not talking about a credit here. We're talking about store credit, meaning we don't have to pay this $540. It's put back on our bill. Now, if we bought from Hedrick Supplies, we bought that on account. And when we bought it on account, remember, we credited accounts payable because that's a liability. That means we owe it. Now, when we return something, it means that we don't owe that anymore, and so we have to debit $540 because we don't owe this $540 to Hedrick's Supplies. Now, something else we need to be aware of is we're going to put down that we prepared debit memorandum number 65, and we're going to put a forward slash right here. So anytime that you have accounts payable or accounts receivable in your general journal, you're going to put a slash here, and you're going to put a slash in the post-reference column. This will become clear later on. Now, do you remember this type of source document right here? It's called a debit memorandum. This debit memorandum tells you that you have to debit your accounts payable account. All right. Now, that special account that we prepared for any purchases that we have to return or we get a credit back, we have this account called Purchases, Returns, and Allowances. Okay, so Purchases, Returns, and Allowances. If you remember, the account Purchases has a debit balance. Purchases, Returns, and Allowances has a credit balance, and that means it makes the Purchases account go down. Okay, so that means our merchandise will go down as well for $540. It's a contra account. Okay, so we got to put that in here. So big reminder is that whenever you buy something on account that is supplies, it goes in the general journal. When you write down accounts payable or accounts receivable, and there's this / right here, you have to put the / as well in the post-reference column, and you'll see why in the next chapter. Right here, whenever we return something, we prepare a debit memorandum, and we debit the accounts payable account because we're returning it. And we use the purchases, returns, and allowances, which always has a credit balance, because it makes purchases, which has a normal debit balance, it's an asset, go down.